Hello, investors. Thank you so much for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. And today we have episode 12 of Investment for Beginners. Manuel, over to you.
Hi, Michael. How are you? You can, for those who are listening and watching, you can find my work over at allinstocks.com. And today we're going to be talking about one stock that you've covered for some time, which is Fubo. Did I pronounce it correctly?
Yeah, I think so. As good as I would. Yeah.
This is kind of a new business to me, or at least I haven't looked at it in depth. So I'm really eager to understand the business and to hear your explanations and your point of view on the business. So first of all, Michael, for those of us or those who are watching that don't know what's the main product or service that Fubo offers, could you explain that to us, please?
Yeah, I'll try my best. So as always, this is just for entertainment purposes. This is not financial advice. I am a Fubo shareholder, so anything that I say is kind of biased. With that out of the way, so Fubo is essentially sports streaming. The way it's set up is that linear TV is dying. So the old way of us kind of paying for cable or whatever, and that isn't really an active, vibrant sector anymore. Everyone has connected TV, or they connect through their laptops or whatever. And people want to connect up and subscribe to sports channels. They have a few options, and Fubo is like the main one here. They're not really the first player advantage, but they're one of the biggest ones. If you want to think about it as if you want to watch a series on TV, you kind of or series on connected television, you'd go for something like Netflix. You'd kind of, or you go to Disney Plus or Amazon Video. If you want to watch sports, typically the way to go about it is that if you can either stay with linear TV, or you can say, "No, I don't want to be watching linear TV. I want to be connected up, and I want to stream it on my terms." So you'd go for Fubo TV. Now, Fubo TV is predominantly based in the US. So it does have some geographies that it's expanding into. So depending on where you watch this may or may not be something that you can access. For example, I'm based in the UK, and in the UK you can't access this. It's predominantly US based, but obviously, like all these platforms, they're kind of trying to migrate out. So does that kind of explain a little bit, Manuel? Does that kind of explain a little bit of what I do?
I still have some questions, which is, for instance, let's say that you own a smart TV and you want to watch some movies. You have Netflix, so you go to the Netflix app on a smart TV. And if you want to watch any kind of sports, you go, there's an app, Fubo app, as such as Netflix. Is that it?
Yes, correct. Yes. So the way it works is you as a user subscribe to Fubo TV. You pay them approximately, I think it's $65, $70 a month. So the idea is that you are paying them upfront. I'll come back to this later on because this is quite important. You're paying them upfront a monthly subscription via your credit card. So it's not like you're kind of watching something on YouTube for free, whatever. You're paying them already out of your credit card details, giving them your first party data, who you are, your age, and your credit card. This is very valuable, but I'll come back to this in a minute. So it's in the traditional ways that you kind of watch your sports, your football or your soccer or whatever, just on a normal television. But that isn't really something that eyeballs are moving away from that. And when eyeballs move away from something, it would cause advertisers to also move away. So let me just double click and explain a little bit more about what Fubo TV does, and then I'm going to pass it over to you. So as I described already, there is this subscription business plan, which is you subscribing to watch the Fubo TV. Okay, so that's approximately 88% of the business. Close to 90% of the business is the revenues are coming from people paying them to watch their sports show, but Fubo has to pay for the rights to show those shows to me or to whoever. And that's really expensive. So they have to go to ESPN or some other kind of broadcaster and buy the rights and then show them to you. Once they show it to you, they also have an advertisement in between, okay? So that advertisement makes up approximately 12% of Fubo's business model, okay? That advertisement is incredibly cash flow generative. It's a very successful business because you are highly engaged. You are watching fuboTV, you on demand, you've sought out to watch that football team or that basketball team or whatever you are. It's not that you just showed up on television. You are highly engaged watching the team that you want to watch. So once you have a certain level of engagement and you have a certain number of eyeballs, because I just described that the eyeballs are coming away from linear TV to fuboTV, advertisers are really, really interested in reaching you. Also, if you think about it, they know that you are most likely 18 to 44 years old. So for an advertiser, you're reaching a key demographic of a certain age group, predominantly males. So you're already a very targeted niche. So if you think of it from an advertiser perspective, if I want to reach the consumer that's 18 to 44 years old, a professional that has money to spend, because obviously they're paying $64 a month to kind of, or $65 a month to watch that content. So it's a professional audience, it's a male demographic of a certain age group, and they're engaged for approximately 7 hours a day on average. It's on. People are watching their content, and advertisers can either go on, let's say, something like Facebook or Twitter. Social media is quite expensive, and you only reach a smaller amount of audience. Whereas with fuboTV, you can reach, as of right now, close to 1 million subscribers. So you can reach a high demographic, and you're not paying them a lot because they're just quite cheap. So for advertisers, this makes a lot of sense. And the advertising business is growing very, very strongly. And the advertising business is where I've started to kind of build my business idea. So so far, does this make sense a little bit about, so there's the subscription and then there's the advertising business. Does that make sense so far?
It makes sense. I wonder how people look at it. First, I pay Netflix, so I don't have any ads, right? So I could go to the Hollywood channel or whichever channel I have on my cable TV provider, but I pay Netflix for the whole movies and series that they produce, but also for not having ads. How does the Fubo users think about having paying and having ads, watching ads on their?
Okay, so in the case of your alternative is to watch your linear channel, okay? And what you're used to right now, you haven't got any choice. To watch sports is incredibly expensive because there's a lot of money in sports. So everyone has to watch an advert. There's no way around it. You know, it doesn't matter, like however you're going to access it, whether it be on ESPN or whatever platform, you're going to end up watching an advert. Even if you watch it in something like in British BBC or something, you know, you're going to watch an advert. There's just no way around it, okay? So people are accustomed to it. It's not quite a like for like comparison with Netflix, because Netflix is different. Netflix, yes, you are paying not to have the advertisement with Netflix. That's what you're paying them for. But this is the reach of something like Fubo is much smaller. Netflix can sell your friends, your access to friends across the globe. You have millions of people watching this on a daily basis. With the sports, you only have a very small amount of people watching it. So, and it's very, very expensive. So you have to raise the prices that you charge people to watch our stuff. So that's the kind of, in a nutshell, I think that kind of explains a little bit. And just one more thing here, and then before we can, oh, you got it, sorry, please.
I was thinking about, now you have, I don't know, you can have 10, 20 sports channels on linear TV. And I was just thinking about the value proposition or the differential from linear TV to this this business.
That's a very good question. Yeah.
You mentioned something like you choose the game that you want to watch. I can also choose the game that I want to watch on my TV.
So the idea is that this is a little bit cheaper than you were able to watch on linear TV. So I think that if I'm right, it's approximately $90 for linear on the cheapest cable is $90, and here you're paying $75. So it's a little bit cheaper to watch that. Some people have said, oh yes, but I have to pay for the broadband. But everyone is paying for the broadband already. You know, you already, I mean, that's a no-brainer. So I don't buy that. The idea is that is the quality that you're watching. You're watching it on 4K, so you can watch 2 games live streaming on the same monitor, and you can be watching like, oh, so-and-so scored there, and oh, that's going to impact that game over there. You can be watching 2 games. I think you can watch up to 2 or 3 games. I'm not quite sure, but definitely 2 games you can watch simultaneously across your screen. So you can't do that with linear TV. There's just no way to do that. So it's just a better experience overall.
Let me just ask you this one more question, because it's a follow-up. The other day I was reading about food marketplaces and Uber Eats, Grubhub, Just Eat Takeaway, all of those. And I was reading, and I'm still on the beginning of my research on those, but I was reading about Grubhub and Just Eat Takeaway, and the Just Eat bought Grubhub, and I was just reading this opinion from someone who understands a lot about marketplaces, and Grubhub targeted directly those restaurants that own their own distribution, right? So it was a good idea because they became just a marketplace without the need for logistics. But then came the other marketplaces like Uber Eats and whatever that have a far wider reach, so they can go to a lot of other restaurants that don't own their own logistics or their own distribution. And then people who went, what was the value proposition for people going to Grubhub instead of Uber Eats that had a lot more restaurants? So, and I confess my ignorance on that industry, but it looked like Uber Eats or any other offered a better experience because it cast a wider net, right? So why would I go to Fubo when, as you said, this is more or less like a commoditized business? You can get it on ESPN or some other providers. There's no, like Netflix CEO mentioned, there's no content proprietariness or differentiation. Why would I go to Fubo and not another business, another option with wider, more channels than just sports channels?
So people are already right now cord cutting. That means that they're already getting rid of their cable already. That's happening. People are having to migrate online to watch their stuff. If you migrate online, you don't have a lot of choices. You have to end up either going to something like Fubo. You can go now towards something like ESPN, but the experience that you get from watching on Fubo is higher, and you're also paying slightly less because ESPN cannot undercut themselves if you watch via the connected TV, like a laptop or whatever. They can't undercut themselves because that would cause their business model that people are paying on linear TV to kind of, why would I pay linear TV more when I can get the same on a laptop or on a connected TV? So what Fubo does is it provides them A, with a cheaper price point, and B, with the same as, or what they would argue, a higher quality experience. One more thing. So we've understood a little bit already about the streaming side and about the advertising side. Just one more thing. The whole thesis here, the whole idea behind Fubo is that started now in November is what I call the crown jewel of this idea. So we haven't touched it with 20 minutes into the episode. We haven't actually discussed the crown jewel. The crown jewel is the betting segment. So the idea here is that you as a user might be watching a game, someone like the Lakers or whatever are going to do a free shot, and you can take a bet in whether they're going to hit that free throw or not. And if you really like that team, you're already watching it. For some people that are into betting, because it's quite a big thing, you know, even Disney now, Disney's figured out, oh, we might actually go and do some betting as well. So even Disney has kind of said, so everybody is interested in betting. So what this teaches me right away is if everybody's interested in betting, is that there is a market demand very high. So it's clearly flourishing, this market demand. we don't know in the future who's going to be the biggest winner. Like 10 years down the road, we have no idea. What we know for the facts are that there's a very high demand for this. In the case specifically about Fubo, that opportunity is not quantified at all in its market cap. So Fubo trades at approximately 3 billion market cap. So, and people have absolutely no idea whether that's going to make $1 or 50 million in revenues or 200 million in revenues. And obviously with between $1 and 200 million and whatever else, it's a huge difference.
Say that, you're talking about the core business or the betting business?
So the betting business, people have no idea how much it's going to make because it only launched at the start of this month in November. So
let me go back just a little bit to better understand the economics or the valuation. Is their core business profitable? And if not, can it become profitable? And second, and then let's go to the second one after you answer.
Okay, so the core business is the subscription business. And the subscription business makes up 88% of the whole business. So let's say 90%, right? 90% of the business is never going to be profitable. It will, in the best case scenario, it will operate at break even. So for
which is the subscriptions or the advertising?
Yes, the subscription. The subscription is going to be break even. The advertising business is approximately 12% of the business right now. It's growing at approximately in the ballpark of 150 to 170% year over year. It's growing really, really fast. And that side of the business is profitable. And that side of the business has high margins. And the idea is that at some point in time, because it's growing quite quickly, it's going to overcast and it's going to become about 20% of the business. Once it becomes 20% of the business, it's just getting kind of interesting because then you can start to see the overall business's profitability improving. Now, I had estimated before that going into Q4 of this year, it would reach approximately 15% of the total business. But I never expected that the subscription business would grow so fast. So even though the advertising business is growing at, let's say, 150%, the subscription business is also growing at 90%, which just blew my mind. So it's a good problem to have, but it does mean that the subscription business is going to remain a small part of the business because the advertising business is going to remain a small part of the business because the subscription business is also growing so fast. But in any case, you can absolutely see that the business's EBITDA margin is improving. So I'll just give a bit of context. So for Q3 of 2019, so before the pandemic, EBITDA margins were negative 121%. Fast forward a year to Q3 2020. So last year, it was negative 78% EBITDA margins. Then for Q3 that just went past last month, it was negative 52%. So you can see that it's over the course of 24 months, it's gone from minus 121% to minus 52%. So it's not difficult to imagine that over the next 2 years, this is going to be at let's say, minus 25%. And if you compare with, let's say, DraftKings or some other businesses in this kind of space, in the betting segment, these businesses are meaningfully unprofitable because it's all about getting the mind share of the consumer. Now, just one more thing that I wanted to highlight about the betting segment. So we don't know how the betting segment is going to work out. This is what we do know. The consumer, the Fubo subscriber, is already very much trusting Fubo by giving them the credit card details and paying them monthly to access their channel. So they're already paying that, okay? So there's already a bit of trust there. People are already accustomed to having their credit card details on the Fubo platform. So what Fubo is trying to do is trying to give you free to play games. So it's a little game that you don't have to bet, but you can kind of just open up your phone and pretend like, oh, I wonder if so-and-so is going to make that next goal or not. So you kind of just, getting used to kind of opening up the app and making a little kind of bet, but with no monetary value. So these are free to play games. And then you also kind of getting accustomed to opening up your phone and engaging with what's on the TV or what's on your connected TV. So you have an engaged viewer that's very much in the interest of the advertisers. The advertisers really want to kind of know, like, who's watching, when are the eyeballs actually in sync with what's happening.
I've looked at the iGaming before, as we've talked offline. And for me, and I know there's a lot of businesses going on inside iGaming. There's the B2B, B2C, and all of that. And for me, the B2C for now is a race to the bottom. Everyone, you got to spend as much dollars on marketing as your next door neighbor because they're spending a lot. So it's the one who has deeper pockets will theoretically stay there in the end, will subsist, but until then it's just a race to the bottom. That's my opinion. And having said that, I can see one of those engaged subscribers watching a game, whatever it may be, and betting live, and I'm already also I've been researching the live streaming e-shopping in China and how it can translate into the Western world. And if channels or if companies can make it highly engaging, it's a damn good business. So the betting and my first opinion of the betting, this company Fubo going to the betting industry was like, well, it's a race to the bottom. But now that I come to think of it, and I'm not sure of I don't know the whole ecosystem, what their competitors are doing and all of that, but I can see it making money because I can picture a lot of fans, those super fans, betting a lot of times on a single game. So kind of cool.
So it's kind of interesting. So as a gambler, by definition, the gambler will go to where they can make the most amount of money, the biggest bet. But there's not a lot of loyalty, right? If you go to DraftKings because they're offering you a bonus, or you go to another betting company, it doesn't make any difference. You can go absolutely anywhere, wherever the cash bonus is best. So that's at the core. The core of the better is about odds. So you're getting the best odd. If you get free money at DraftKings, I'll stay there. But as soon as the DraftKings platform is not giving me any cash bonus, I'm going to go elsewhere. With Fubo, you're already on there. You are actually, you're watching the show there. It's like the loyalty is huge. It's mind-blowing. So here's a few more things that I wanted to highlight. So in the case of Fubo, right? So they had approximately 94% year-over-year growth in the number of subscribers. So it's pretty much doubling since last year. They're going to end up this year with 1 million eyeballs already. So this is just in the US. And you remember, this is a very small niche, right? Because we're talking about sports, right? It's already in 1 million households, and it's growing very, very fast. I've often made the case, and for me as an investor, I believe that the value proposition of a business can be directly correlated with the growth in customers or users. If you see a social media platform like, let's say, Facebook, even now, it's reaching approximately something like 2 billion people a month, or even daily active users, I don't even know. So even now, this business is so freaking old, like Facebook is old business and it's still growing. So it just goes to show, in my opinion, if you're getting a large growth in customers or users, that usually shows that there's a lot of interest in that company. If there's a lot of interest in that company, that means that in this case, Fubo, the consumer is very much interested in subscribing to that business. It shows that the business has some value. There's a question mark at whether you're paying 3 billion for Fubo, you are getting a margin of safety or not. That's a question mark, but there is no doubt in my mind that this business has a lot of value to 1 million households. There's a lot of value there because they're paying $65, 65, 75, something like that. It's not a cheap product that they're getting. So I believe that when we go back to the betting that we just discussed, there's a lot of loyalty there that's attached and growing towards the platform. So I think that we'll have to wait until Q4 21 results come out in February to find out some understanding of the margins that Fubo will have from the betting segment. If the margins look, as management had said, at even marginally profitable, this is just going to blow up this stock up, I believe. Sorry, I interrupted you. I just wanted to say that.
No. We're reaching the end of our conversation. I want to ask you about competition. How can Fubo get hammered by competition? Who's out there? What are they offering? Is there any direct competitor?
So Disney is spinning off, I believe, ESPN. That's going to be, I think, the most realistic competition. Obviously, Amazon also has a lot of rights to certain football games or soccer in the US. So Amazon is also in this space to a certain extent. But there's always going to be a lot of competition. But I've often made the case that competition justifies the interest in the market. If you have a rapidly growing market and you have no competition, that means that there is no interest. So I give the example of people.
Netflix for the decade.
So for that Netflix, people were too slow. But you look at it now, you can get Amazon Video, you can get Peacock, you can get, I can't even name all the shows. You can get so many different steps. So there's a Curiosity Stream, there's kind of a bit of a play like this. There's a lot of interest. There's so much competition. And if you think about it, the competition was a bit slow to wake up to this because they couldn't figure out how to make the business profitable enough. And they were slow. They were kind of like, it's very expensive to make your own shows. But now everyone is kind of, even Apple TV is throwing in there. Everyone is really kind of like, I want to take some of those dollars away from Netflix. So I believe that competition in some ways at the start of a growing sector justifies the appeal of the business rather than something to be worried about. So yeah, that's pretty much what I wanted to throw in there.
Okay, nice, pretty interesting. I'm gonna dig deeper on this one. Very interesting in knowing the future of this and understanding the industry as well. I think
okay, everyone,
we reached the end.
Thank you so much, everyone, for tuning in. Thank you. See you next time. Bye-bye.